we were discussing on how to determine the value of the cost of sales, okay, as well as getting the value of the closing inventory using both the periodic method as well as the use of the cumulative method. There's a question which I didn't save my work, okay. What exactly was the question? Can someone share the question? The question that we did yesterday, and there was a question. However, I had modified this question. Anyone who has the modified question?
I do. I can read it out.
Okay.
I read it out as you edit.
As I type here, yes. Okay.
On 12th March, it's 15th March, sale of 15th March.
Okay.
Sale of 400 units.
400 units.
At $7.5.
Okay. At
each.
Okay. $7.5. Okay. Then on 25th.
On 25th March, bought 300 units at $7 each.
Bought 300 units.
Yeah.
At
$7 each.
Okay, and that was it.
Yeah, that was it.
Okay, so we meant to get the cost of sale and the closing inventory using the periodic as well as the use of the cumulative method. We discussed which method we discussed? Cumulative or periodic? We did part one part.
We did cumulative.
Cumulative, okay, fair enough. We did cumulative. Then let's discuss on the use of the periodic. Okay, we discussed on the use of the periodic method. Okay. So let me open my working area. We work it out. A second. Okay, periodic method. In case we use the periodic method, don't forget, as I mentioned, we're going to be evaluating the cost of sale as well as the closing inventory at the end of the month. In this case, it's the end of the month of March. Okay, so the first bit we get is to get the total purchase, for example, that has been made throughout the month. Okay, therefore we get the average price for the entire month. Will be equal to, on 12th March, there were some items that were bought. There were 1,000 items bought at a price of 5. At a price of 5, okay. Then on 21st March, the company also bought some other item, 500 items at a price of 6. Then on 25th of March, the company bought other items, 300 items, 300 units at a price of 7. Those are therefore the total purchase made during the month, okay? 12th of March, 21st of March, and the 25th of March, okay? That's the total purchase made to the month. We divide by the number of units that have been bought throughout the month, okay? 1,000, 1,500, 1,800. So we divide therefore by 1,800 to get therefore the average price for the entire month, okay? And how much is the average price?
5.61.
5.61 kind of for the average price of commodities that have been bought during that month. Therefore, because the cost of the good that have been sold, the cost of sales, therefore, be equal to therefore the company on that 1st of March. So the sale, we have two sales. One was made on the 25th, was made on the 15th of March. Then we also have another sale that was made on that 1st of March. Okay. So in total, the total units of sale, 15th of March is 400. Then 25th, on that 1st of March, we have 800. So therefore, the total units of sale for the month, we multiply by the cost per item, which you obtained equal to 5.61 times 5.61. Therefore, the cost of goods sold during the month. Okay, 400, which this was on 15th of March, and 800, which was on that 1st of March. Okay, in total, what's the cost of the goods sold?
$67.32.
732, for the price of goods the company has sold within the particular 1 month. Okay. The next question we need to answer is, what was the value of the closing inventory? Okay. During the month, the company bought 1,800 units, as you've seen here. They bought 1,800 units. They sold 1,200 units. Okay, was 400 plus 800. The company sold 200 units. Therefore, the balance, which is 600, therefore the closing stock by the end of the month, which is 600. We multiply by the value per item, which is remain at 5.61. Give us how much?
$33.66.
That's 366, and that's the value of closing stock and the cost of sale. Okay, using the periodic weighted average method. Clear? Okay, those are the 4 methods we use when it comes to determining the value of closing inventory, as well as obtaining the cost of sale. There is of the first in, first out, there is of last in, first out, there is of the cumulative weighted average method, and there is of the periodic weighted average method. Those are the 4 methods we normally use. Okay. Question? Okay, if there's no question, that's me. Therefore, you have been able to understand the concepts. Okay. As I had mentioned, don't forget, either of the method or either of those 4 methods, they have their own advantages and their own disadvantages. So there's no correct method, because this is the best method of valuation, not necessarily. Okay. Later on, as you shall be doing your accounting, okay, you understand that the international financial standards, they do not recommend the use of last in, first out, okay, when it comes to the presentation of the financial statement. But in terms of our cost accounting, we can use any method, okay? But in terms of financial accounting, you'll be required to use the other 3 methods, but not the use of last in, first out. But for our own purpose, when it comes to cost accounting purposes, okay, you can use either of the method, okay? So the idea here is that I would propose that you try to go through maybe, I don't know, the textbook, okay? Since now you have access to the textbook, okay? You go through what are the advantages of each of the method, okay? But there's no one better method than the other, okay? When it comes to evaluation of inventory, as well as the quantification of the cost of items that we have sold, okay? Question? Okay, and that's on inventory. That is accounting for material, okay? The next topic, if there's no question, we can go to the next topic, which therefore is accounting for labor. The next topic is accounting for labor. When it comes to the payment to our, when it comes to paying wages, when it comes to paying salaries, okay, how do we account for the labor cost? Okay, that's kind of for our next topic, okay, accounting for the labor costs. Okay, is our next topic. Any question before we move on? Okay. Now, in the case topic for accounting for labor, okay, so as we had mentioned when we are getting, we are preparing, okay, the cost card, we did say that one of the key components or one of the key components of product cost is the labor cost, okay, which went ahead and made the distinction whether is this labor cost direct or is it indirect, okay. If it is direct, then of course it became part of the product prime cost, okay. If it was indirect labor cost, it became part of the production overhead cost, okay, it became part of the production overhead cost, okay. So that's the idea here that we should be mentioning here, okay? That's how do we therefore account for costs? How do therefore do we prepare accounts, okay? Whereas we want to account for labor costs, that is either both direct as well as both indirect, okay? So how do we therefore account for the labor cost, okay? For labor cost that is direct as well as labor cost that is indirect, okay? Even though we have already introduced in a way, okay? When we're discussing on how to prepare the cost card, okay? So this topic, we'll be discussing the different method of remuneration. Okay, when it comes to paying, when it comes to the payment to the employees of the company. Okay, what are the different methods that the company can pay the employees? Okay, you can pay it based on weekly basis. Okay, you can pay it a fixed salary. You can pay it using, for example, the bonuses. Okay, so all those shall be discussing the different method of paying the employees. Okay. Then shall discuss also what we call the labor turnover. Okay, labor turnover essentially is now at the end of the day, as a company, you do want to avoid cases where you have employee leaving your organization. Okay, you want to have employee. You don't want to have every year you employing a new employee. You are employing a new staff member. You're employing a new employee. Okay, because employing a new staff member in itself is expensive. Okay, in the sense that you do need to, for example, train those employees, okay, or for example, your systems, okay. So every time that you do hire a new employee, you do hire a new staff member, then of course the cost of the company is increasing, okay. So the company will want to reduce the chances of an employee leaving the organization, okay, because you will end up incurring more costs when it comes to get a new person. Okay, so labor turnover is the number of employees who leave the organization during a given time period. Okay, and of course here the intention of the management definitely should be reducing the labor turnover. Okay, we'll discuss it how we account for labor costs. As I mentioned, how do we make the distinction whether between the direct as well as the indirect? Okay, even though we have already mentioned that. Okay, shall discuss how we incorporate the labor costs as we did in the cost card. Okay, when it comes to provision of service, when it comes to making our products, how do we incorporate the labor cost? Okay, and lastly, shall be discussing what we call the labor ratios. Labor ratios. These are ratios that can help us in getting to understand, for example, the extent of efficiency of our employee, for example, the labor efficiency, our capacity to sustain production, how effective have been the employee in terms of production. So if you're discussing some of the ratios we can use in evaluating, can be used in evaluation of the efficiency and effectiveness of our employees, especially those employees involved in production. Okay, so that's what we'll be discussing in this topic. Discussing the method of remuneration, labor turnover, account for labor costs, as well as the ratios can use that can assess the performance of our labor, the performance of our employees, especially those employees involved in the production setup. Okay, that's what we're discussing in this topic. Okay. As we had mentioned previously, when we were preparing the cost card, we did say that we may have employees, there's three types of employees, employees who are involved in the production, who are actually involved in the production of the commodity, If, for example, you're making cement, those employees who are involved in maybe the machine, They're the one involved in the conversion of the limestone, to the cement, for example, Now, those are the direct employees, They are actually involved in the production, And of course, as we said, the cost or the amount you pay to those employees is of course the direct costs, It's all referred to as the direct costs, Now, there's some other employees generally who main working could be to supervise, okay, how the process is being done, okay. You can have called the foreman, you have called supervisors, okay. The main work is in quotes to supervise how the work is being done by those employees in the production setup, okay. So those employees, okay, as per se, they are what called the indirect costs, okay, the indirect laborers, okay, which they make therefore the cost you pay to them therefore, okay, become part of what called the indirect cost, okay. However, there could be some pay that you make to the direct employees, okay, the direct workers that are considered to be therefore to be indirect cost, okay. There's some pay that you do make to them that are considered to be indirect cost. For example, if you do pay the employee what called overtime, okay, you pay them overtime, the overtime premium you pay to those employees is also considered as indirect cost. So sorry, overtime premium is this, okay. It is the general overtime premiums that you do pay to the employee, okay, is considered as part and parcel of the indirect cost, okay. If, for example, you pay your employee on average, you pay them, let's say $10 per hour, okay, so you pay them per hour, okay, and you pay them $10 per hour, okay. If because you do need the employee, okay, to work overtime, okay, okay, the extra you pay them, if, for example, let me call this is the basic pay, call the basic pay is, for example, equal to let's say $10 per hour, okay. However, because of the overtime, you require them, you pay them, okay, let's, for example, $15 per hour, okay. In here, you have paid a premium. In this case, the premium you paid is equal to $5. Now, this $5 that you pay to those employees is part of what we call indirect costs, okay. It's part of the indirect cost, okay. What you call it for? It is not part of the prime cost of the product, okay. It's not part of the prime cost of the product, okay. This applies to the case of bonus, okay. If at the end of the month you pay the employees a bonus, okay, maybe you pay them an extra over and above the usual pay, you pay them, let's say, 10,000, okay, per year, okay, as part of the bonus scheme, okay, bonus pay. Now those bonus payments become part of indirect cost, okay. Now the case of what we call the idle time. Now, what is an idle time? Now, idle time is a scenario where you pay the employee even though they're not involved in the manufacturing of the goods, okay. For example, if there's going to be a machine breakdown, okay, if there be a machine breakdown, okay, now do you pay the employees? Yes, you pay them even if the machine has broken down, okay. As the employees in quotes wait for the machine to be repaired, they're still counting, okay. They came to work, so you have to pay them either way, okay. Now those idle time, the pay you make for the time the employee are not being utilized, okay, is referred to as the idle time, okay. And since the employee are not working, they want to be involved in the conversion of material to the finished good, okay. Therefore, the idle time pay becomes therefore an indirect cost, okay. This applies also in the case of the sick leave, okay. The sick pay, if you do pay the employee for during sick pay, which is during sick leave, okay, of course, therefore, you pay them, but they're not involved in production, okay. These are employees who are involved, who should be involved in the production. However, they may be sick, okay, which implies therefore you pay them even though they're not involved in the actual production of the commodity, okay. Therefore, the sick pay therefore become part of the indirect cost, okay. Generally, the key component of direct cost is the basic pay, okay, the basic pay that I think we have mentioned, okay, or unless the employee is doing what we call request or job costing, okay, where the employee is performing a specific job for the particular customer, okay. An example, okay, here with the one I've just mentioned, given this example here, okay, you pay the employee a basic pay of $10, so this $10 is part of the direct cost, okay. Now, this, in the case of the overtime, here there's an overtime here, and the overtime you pay them $15, okay? Don't forget, you're paying $15 for every extra hour the employees are working. The $5, we say this is indirect cost. The $10 for the 15, okay, is part of the direct cost, okay? I hope that's clear, okay? Because here you have overtime, and you pay the employee $15. You see that the $5 is part of the indirect cost, okay. However, the $10 or the 15 is direct cost, okay. The pay that is based on the basic rates, okay. The pay that is based on also on the basic rates become part of the $10 here is part of the direct cost. The $5 is part of the indirect cost, okay. You have to be quite careful when it comes to accounting for the labor cost, okay, because you can you can confuse very easily, okay. So that's how you account, so you determine, or you make a distinction between the direct cost and the indirect cost, okay, the direct cost and the indirect cost, okay. As I mentioned at the beginning, don't forget, not all pay to the direct employees, not all pay to the direct employees is part of the direct cost, okay. That's what you have to be careful, okay. Not all pay to the direct employees is part of the direct cost, okay. I think you have mentioned the overtime premiums, the bonus, the idle time, as well as the sick pay. Okay, those are not part of the direct cost. Okay, be careful on that. Question, by the way. Don't forget, as I had told you before, don't forget, you need to get the marks out of the class. Okay, so you have to, there should be something else over and above the person normally just go through the textbook. Okay, by asking question in class. Okay, if you do have any question. When it comes to the different method you can remunerate your employees, okay, you can pay the employees, okay. So these employees, okay, and here by the employees I mean the employee involved in production, okay. You can pay them based on a number of methods. You can pay them based on time, okay, like the one you've just discussed, where you pay the employee based on the hours they work, okay. So for every hour they work, you pay them, for example, let's say $10, okay. So the pay there is based on the number of hours. So it's called time work, okay. Now, when it comes to piecework or the method of remuneration, in the case of piecework, you pay the employee based on the units they are completing. Okay, you can tell them that I pay you at the end of the day. Okay, based on how many units have you been able to complete as an employee. Okay, I don't know, if for example is maybe it's employee who are involved in, let's say, construction industry. Okay, you have employee who do make grading work. Okay, they do make the grading work. Okay, or even like you have painters. Okay, you're involved in construction, you do have painters. Okay, so you pay them based on how many input rooms. Okay, have they been able to complete. Okay, so the pay is not based on the time, the pay is based on the work they have been able to complete. Okay, so these painters, for example, you pay them based on how many rooms they've been able to paint within a given time period. Okay, so the pay to them is based on the number of units they are completing. Okay, if they're employees who have direct control of the production, okay, you pay them based on how many units do they complete, do they produce, do they manufacture, okay, within a given time period. Okay, so it's called piecework. Okay. Of course, you have the case of the bonus scheme, okay, which I think I already mentioned, okay, where now this is not based on the work they have done, okay, it's based maybe because the company has performed well, okay, you just want to appreciate the employees, so you give them some extra. It's not based on the time, it's not based on the piecework, okay, but it's based on the employee, maybe the company, good performance within a given time period, okay. These are the different methods you can use when it comes to the remuneration of the direct employees. Let's begin the piecework. As we had mentioned with regards to the piecework, okay. Now, in the case of the piecework, we pay the employee based on time. Okay, I think we have mentioned that. Okay, but the pay to the employee is based on the time. Okay, but the employee are paid on the basis of the hours they have worked. Okay, so if, for example, they pay to the employee, you pay them $10. Okay, and within a given day they have worked for 8 hours. Therefore, at the end of the day, how much do you pay them? You pay $10 times 8 hours. Okay, therefore you pay them $8 as the daily wage for those employees because it is based on the time they have worked on that particular company. For example, if an employee is paid at a rate of $5 per hour and they work for 8 hours in a day, therefore, how much do you pay them? You pay them 5 hours times $8 per hour, which therefore becomes therefore $40. Okay, therefore the total pay by the end of the day. Okay, so the payment to this employee is based on the hour. We'll call time work. Okay, it is based on the hour which we refer to as the time work. Okay. Another example. If, for example, we have a company where it is based, okay, for example, an employee is paid on a normal rate of $5 per hour and they work for 4 hours overtime, okay, for which the overtime is being paid time and a half. Okay, what I mean by time and a half is that the pay to this employee, okay, is 1 and 1.5. Okay, we'll call time and a half. 1 and 1.5. Okay, the premium, in short, you're trying to the premium here is equal to 50% of the normal pay. Okay, so if the normal pay is $5, the premium is equal to half, which is $2.5 per hour. Okay, we can imply therefore within the pay per hour for the overtime is therefore equal to 150%, okay, of $5 to give us $7.5 over dollar. Okay, they have worked how many hours? 4 hours. Therefore, 4 hours times 7.5 to give us therefore $30 per hour. Okay, so you have to be quite careful with the terms that are normally used. Okay, this is time and a half. Okay, well, that means it is 1 and a half. So that's what time and a half means, because that was what the examiner will be phrasing the question even in your main exam. Okay, so anyway, be careful how you interpret the question. Okay. So the pay, as I mentioned here, the pay is based on the hours spent. Okay. So for example, in this case, therefore, the pay here is for the overtime here. Okay. For this case, the overtime. Okay. 4 hours times mentioned to be the pay per overtime hour. Pay per overtime hour. Pay per overtime hour. Overtime hour is equal to 1.5 times 1.5 times $5 to give therefore the amount per hour $7.5. Total pay 7.5 times 4 hours to give therefore $30 to be the total overtime. But it's not the overtime premium. For example, go through this question. Try to work it out. Okay, it's a very easy question. Okay, just like what you have done here. Okay, I want to see how far you can go based on what you just learned right now. Okay, not that any prior knowledge that you require here. Okay. Ian.
Yeah. So this is what I came up with.
Sure, tell us. Okay, so the basic pay for the standard hours, how much?
Basic pay for standard hours 120.
For 60.
For 20.
For 20. Is it direct? Is it indirect?
Direct.
Direct for 20. That is from Ian. Continue. Basic pay for overtime hours?
16.
16.
Yes.
1/6. Direct, is it indirect?
Indirect.
Indirect, 16. Okay. Overtime premium?
50.
Sorry?
$50.
$50. Direct, is it indirect? 50. Okay. Is it direct? Is it indirect?
Wait. I didn't answer that one yet. But for the bonus, I wrote 50.
Bonus 50.
Yes.
Direct, is it indirect or direct?
Indirect.
Indirect. Okay. Anne, do you agree? Thank you, Ian. Anne, do you agree?
Pardon?
Do you agree with what Ian has said?
I can't really see this, so I can't see the question clearly, so I don't know.
You can see
what's what.
Screen. And you can see screen. And you can see the question.
Pardon?
You can see the question.
Yeah, it's blurry on the connection. Yeah.
Okay. So you don't even know the question that we're doing.
No, I know the question, but it's just blurry. I can't
Wow. Okay. Okay. So you've been missing so many.
The question is blurry, so
it is, even from your side.
Yeah.
Joshua, how is the screen from your end?
It's a bit blurry.
Ishmael,
because of
my screen?
connection, why it's blurry.
Yes.
How is my screen from your end?
It's blurry.
Okay. So it could be my connection or what?
Yeah, because even there's a time your sound went off like for 2 minutes.
Wow.
There was
Okay.
no audio like for 2 minutes.
Hey. Hirani, how is it from your end?
Mine is clear.
What's happening? Okay, Moses,
Yes, sir.
how is my screen from your end?
It is on and off.
On and off.
Yeah.
Okay. So I'm not sure whether it's my screen. Okay.
Oh no, so it's a connection, not yours.
Okay. Oh, it's your okay. Okay. Anyway, those are the issues with
Yeah.
online learning. Anyway, so Moses, tell us, do you agree with what Ian has presented?
Let me give me a minute. I was still calculating.
Okay. Hamida,
Yes,
do you agree with what Ian has presented?
for the basic pay for standard hours, I got for 20.
For 20,
But the other one, I got the house
Sorry, Hamida, I lost you a bit.
times.
Hamida, I lost
I
you.
got 7.
Sorry, what did you get? 70?
7.
$7.
Yeah, basic pay for overtime hours.
Oh, you got $7.
Yeah,
Is it direct? Is it indirect?
indirect.
Indirect $7. That is from Hamida. Okay. Continue.
And bonus, I got 50.
Bonus, you got 50. What about overtime
Yeah.
premium? What about overtime premium?
Overtime premium. I'm still doing that.
You're still doing that. Okay. Marvin,
I'm still calculating.
wow. Jay, Jay, you're not in class.
Yeah, I'm still working on it.
Hey, okay. This is really a question. Anyway, let's do it together. Confirm what you've been working on. So we do here, we have an employee who works at a standard hour per week of that 5, and they're paid at a basic rate of $12 per hour. Therefore, the basic pay, that is here, the basic pay should be equal to, therefore, that 5 times 12, that 5 times 12, and you get how much? 420.
Yes.
420. Don't forget, this is basic pay, and this employee is a direct employee. Therefore, the total amount of basic pay at basic rate, and therefore equal to direct labor hour, which in this case, therefore, is equal to 420. Okay, nothing there. Then this employee, within 1 week, she worked for 42 hours. Therefore, the overtime hours they worked, therefore, is that 5, okay, minus 42 to give us 7 hours. Okay, to give therefore 7 hours. Okay, therefore 7 hours. And the hours they paid, the overtime is paid time and a third. They pay time and a third. Okay, therefore it's 1 and third. That's what it means. Time and third means 1 and then third. Okay, but we need to get the basic pay for the overtime. Basic rate is $12. Okay, that would be 7 therefore times 12. Give therefore 84. Therefore, for those extra 7 hours, okay, they're being paid for every hour. They're being paid at a basic rate of $12. Okay, to give therefore 84. Therefore, the total pay, since it is based on the basic pay, and this employee is a direct employee, therefore, it is a part of the direct labor cost of 84. Okay. Now, don't forget, for these 7 hours that the employee worked, they were not being paid at $12. They were being paid at one and a half. one and a third, okay, time and a third. Therefore, the premium is a third, okay, the premium is this a third here, okay, there's a premium is there third, okay. Therefore, because therefore the amount being paid for the overtime premium is therefore 7 hours times a third of the basic rate, which in this case is $12. To give us how much? 28. 28. Therefore, don't forget, since this is overtime premium, we say that this is the part of indirect cost. Therefore, $28 here. Okay. And the entire bonus, which in this case no calculation needed, therefore become part of the indirect labor cost. Here, ask.
You've lost me at basic pay for overtime hours.
Okay, basic pay for the overtime hours. Okay. So how many hours did this employee work within that week? How many hours?
Pardon?
How many hours did this employee work for that week? How many hours?
11.
How many?
11.
Hey, how many hours did this employee work for the entire week?
42.
42 hours, is it?
Yeah.
How many hours was this employee required to work?
35.
That 5. There was the overtime hours.
7.
How many hours?
7.
7 hours, isn't it?
Yeah.
What was the basic rate per hour?
12.
$12. There was 7 times 12, give you therefore 84.
Okay.
Clear, Ian?
Yeah.
Okay, overtime premium, you got it?
Not quite.
Okay, so on the case of the overtime premium, so you first begin, how many hours is this? What's the overtime hour? Still remain at 7 hours, isn't it? The overtime hours remain at 7, isn't it?
Yeah.
Then this employee is paid at a time, the overtime is paid, you can see where my screen is, overtime is paid at a rate and a third. Okay, let me actually even expand it.
Yeah.
The overtime is paid time and a third. Okay, time and a third. Now, what that means is that this employee is paid 1 and a third, okay, from the usual pay. The usual pay is $12. However, the overtime rate, let me call it overtime rate, is 1 and a third times $12. Yeah, therefore $16. Therefore, for every hour that this employee work overtime, they are paid $16. Then the premium is therefore $16 minus $12, together therefore $4. What's happening? Okay, which is equal to $4. Okay, it's $4. $4 times how many hours for overtime? 7. Therefore, $28 with the premium. Okay, the extra amount. Not sure what's happening here. The extra amount the employee is paid over and above the usual $28. Clear, Ian?
Yeah. Now we're good.
And the bonus, the entire of the bonus pay is indeductible. Alexander.
Yes. What I had reasoned as, this is how I had reasoned. On the basic pay for standard hours, 35 hours per week, multiplied 12, which is the basic rate of 12 per hour. But then this person, he worked for 8 weeks.
No,
So
no, in week 8. No, not 8 weeks. If you read the sentence, it's in week 8, she worked for 2 hours.
Oh, so it's because I thought I calculated for all the weeks.
Oh, it's for 8 weeks.
One.
Yes. Okay, that's a mistake you made. Okay. Because the sentence is in week 8, not in 8 weeks. Maybe the way the sentence was constructed, you did misinterpret. Okay, that's the mistake you made. Okay, sure.
Yeah, sijaelewa basic pay for overtime hours, the way it was done. I haven't understood.
The basic pay for overtime hour. Okay, so the question is that within a week, okay, how many hours is this employee meant to work? Joshua, before you.
Yes.
Within a week, how many hours is this employee meant to work?
Supposed to work around, that's 35 hours per week.
35 hours per week, isn't it? They're meant to work that 5 hours per week. Okay, but in this week 8, how many hours did she work?
42.
42. Therefore, what was the overtime?
7.
7 hours. So this employee in week 8, the total overtime hours is equal to therefore $7. Clear? So it's 7 hours. It's 7 hours. Clear there?
Yes.
What's the basic pay per hour?
$12 per hour.
Okay, therefore what's the total pay for the overtime? $12 per hour times 7 hours, isn't it?
Yeah, yeah.
To give us therefore 84.
Oh, you know, I thought where is that? That a time and a third.
Time and a third, as I mentioned.
Me.
Okay, you have to be quite careful. A time and a third, as I mentioned, a time and a third means 1 and 1 and third. Okay, if you're being asked to get a time and a half, it's 1 and a half. Okay, not a half, not just a third. Okay, it's a time and a third. Okay, so you're paid time. Okay, you're paid $12 times. Okay, a third of the $12 you're normally paid. Okay, that's what it means. A time and a half. What it means? A time and a half. That's what it means.
So bonus, for bonus you don't you can
bonus
you calculate a time and
no for bonus bonus is as I mentioned, for the bonus it is not either time based or it's not either piecework based. Okay, so you just paid a bonus. Just is a bonus by the end of the year. The company pays you X amount of. It's not based on the output as per se. That was the case of the bonus. So it's not based on the output. You just paid a lump sum. In this case, therefore, $50 for this particular employee. It is $50.
Just so how different? It's a little like different now overtime premium and
don't forget bonus. Don't forget the overtime premium, the basic pay. They're based on time based. This is a time based. Okay, you're paid based on the time that you work. Okay. So they're time based. Okay, so the basic pay, the overtime premiums, they are time based. Okay, bonus is not time based. It's not pegged on the number of hours this employee works. Okay.
Yeah.
So bonus is it's just I'm trying to look for an easier way to explain it. Okay. But for the bonus,
nimeelewa bonus. The problem is your overtime premium and basic pay for overtime hours. Your overtime in both statements in confused. I think as a calculator the same.
No. For overtime is as I said, it's overtime. Okay, it's way above what you're meant to have worked. You're meant to have worked that 5 hours, but you worked 42 hours. So there's a pay for the time over. You're paid for the time over that 5 hours that you were meant to have worked. But the bonus is not based on the overtime. It's not time based. It is not based on the number of units that you produce. Okay, that's what we call a bonus. It's bonus.
Okay, but a bonus, okay. The problem is your basic pay for overtime and overtime premium. Hizo mbili ndio ziko na shida.
Okay, let's first begin. So here, the first thing is to get to note. Okay, how many hours were you meant to have worked? That 5 hours. Okay, how many hours did she work? 42 hours. Therefore, what was the extra time? What was the time over and above the basic, the standard 7 hours? Okay, clear there?
Yes.
Okay, then what is a basic rate? Don't forget this is all called a basic rate. Okay, that every hour that you work, okay, you are required, okay, or the company must pay you X amount of money. Okay, so for this company, for every hour the employee works, they are being paid $12 per hour. They worked an extra 7 hours. They was there for the basic pay on that 7 hours. It's 7 hours times 12. You're therefore 84. Okay. The next thing is overtime premium. What's premium? It's something over and above what's required. Okay. So the premium here, as we mentioned, the rate per overtime hour is not $12, but it's equal to $16. Well, it's $16 because it's a third more than the usual. It's time and a half. It's a third more than the usual. Therefore, it's equal to $16 per hour. Okay. So this employee, therefore, they are being paid for every overtime hour they work over and above the usual. They are being paid $16. There was a premium. What was the price over and above the $12? It's $4. 16 minus 12. Clear there?
Yeah, it's clear.
Then how many hours did they work over and above? There were 7 hours. So they have 7 times the premium of $4. So here, therefore, 28.
Understood.
Okay.
Sir,
Yes.
I have a question. How comes you subtracted the 16 from the 12? I mean, yeah.
Because here, the intention here is to get the premium. Okay. So here, if you work overtime, how much do you pay per you paid per hour? You paid $16 per hour, isn't it?
Yeah.
Then what's the usual pay? If there's no premium, what's the usual pay? $12, isn't it? Therefore, the question is what's the premium? What's the amount you paid over and above the basic? And therefore, 16 minus 12, isn't it?
Okay. Yeah.
Or in simple term, okay, the premium here is a third. Okay, the third you have here is a third. Therefore, the premium is a third times 12 to give us $4. Clear, Moses?
Yes, sir.
Okay.
I had another.
Ask us.
What about when you want to calculate the overtime itself, not the premium?
The total overtime you're paid.
Yes.
In case you want to get the total overtime, you don't want to make a distinction between the direct and the indirect. Okay, it's simply $16. Okay, simply $16. Okay, times the number of hours, which is 7.
Okay.
To give us, I think, should be 120 something. Should be 120 something, which is simply equal to 84. Okay, plus 28.
Okay. Thank you, sir. That's what I was confused about.
Okay. Don't forget the overtime. The total pay for the overtime is 16 times 7. But for the sake of accounting, okay, this for the employee they may never even know, okay, how it is the distinction of the cost. But all they want to receive is 16 times 7, which is 84, the plus 28. Okay. So that's on the pay. Alexander, you still have another question?
Yes. Here when it says overtime is paid at time and a third, I was referring to the previous example whereby when it said time and a third, I took 1.5 on the previous one, 1.5 times the standard hour. Yes.
Okay.
Yes. Because you see here it said 10.5, so that's 1.5.
Yes, it's 1.5. Yes.
Multiplied by 5 per hour.
Yes.
And so the next one, the next example also, when it said time and a third, I took 1 1/3 multiplied by the rate of 12.
Yes, so you got 16.
So it comes down to the calculation of overtime premium, whereby if you do that, it will become it will become 16.
Yes, which is 16.
And 16 times 7 is not 28.
16 times 7 is 112. Like this, you get 112.
112.
Yes.
Yes. So that's what I thought could have been there at the overtime premium.
Okay. Now the problem with that is the 112 is a total pay for the overtime hours, not the premium. But the 112 is a total pay for the overtime. Now, what's the premium? Premium means it's something over and above the usual. That's what even the term premium means, isn't it?
Yes.
So the usual rate is $12. Okay. But this employee is being paid $16. So they're being paid an extra of $4 per hour. They'll call the overtime premium. Okay, but I get where you're coming from. But don't forget you're being asked to get overtime premium, not the overtime pay. But the overtime pay is 112, which is very correct. It's 112. Okay. However, you're being asked overtime premium. Okay, the pay over and above the usual.
Okay.
Yeah. So, but then you have to be quite careful. But like in this example, let me just go back to the previous slide. Okay. In this example, don't forget here is the total amount paid for the overtime. Okay. So this is not about the premium. This is the total amount paid for the overtime. This is the total amount paid for the overtime. The 4 times 1.5 times 5. This $30 here is the total amount paid for the overtime. Okay. In this case, there's no distinction between the premium and the overtime at the basic rate. For example, here the premium, okay, the premium in this example will be equal to $2.5, okay, because the premium here is you're meant to have paid at 5, you're being paid at 7.5. The premium is 2.5 times how many hours? Times 4 hours. Okay, the 4 hours is times 4 hours. Together, therefore, $10. The overtime, the overtime hour paid at the basic rate. Okay, so here is overtime paid at the basic rate is equal to the hours remain at 4 times, okay, what's the basic rate per hour? $5. Therefore, 5 together for 20. The total still goes at 30. Okay, which you got here, 30. That's what you obtain here. Okay, but here what we're doing here is that we're making distinction between the direct and the indirect cost. Okay, in this next example. Clear?
Okay, thank you.
Okay.
I have a question.
Yes.
In accounting, real life, will they use these terms like 1 time and a half, 1.5, all those things?
Not necessarily. Okay, this is just the language of your examiner, but not necessarily.
This language is hard one, and I confuse me too.
You may have to get used to it, but essentially, okay, that's for the examiner. Okay, in the real world, maybe it's you to some the terms you'll be using. Okay, but the basic thing is that at the end of the costs need to be classified quite well. But the terms you want to use along the way, okay, it's up to you. But for the examiner, those are the terms that he uses.
Okay.
Yeah. So I don't know. It gets just get used to it. I guess that's the thing. Okay, so that's on payment that is based on what we call time work. Okay, the pay is based on the time. The pay is based on the time that the employee has worked. Okay. Now the next method, which I think we discussed, was what we call piecework. Okay, we'll call the piecework. Now, in the case of the piecework, the pay to the employee is based on the work. It's based on the work done. Okay, not on the time, but based on the work done. Okay, and I give an example of a painter. Okay, you can pay the painter based on the hours they're working, but you can also pay them, for example, okay, based on how many units or how many paints, okay, have they been able to finish with their given time period. Okay, so their pay is based on the output, okay, not on the hours they worked. Okay, whether they work 10 hours, they work 3 hours, okay, that is not of consequence. But the pay is based on how many outputs, okay, have they been able to complete within a given time period. Okay, so the pay to them is based on the output, not on the number of hours they have worked. Okay, they call the use of the piecework. Okay, so in the case of the piecework, the wages are paid on the base of the units that have been produced. Okay, so the pay is based on the units produced. Okay? Units produced, work finished, based on the output. Okay. For example, an employee is paid $0.2 for every unit produced. Okay, so for example, that's an example. Okay, so the pay to the employee, you mean to that every unit that you complete, okay, the pay is equal to $0.2 of a dollar. Okay, so for example, they have a guarantee. Okay, so the company can guarantee that, hey, because it is not, maybe the company may not be able to produce unit. Maybe the machine has broken down. Okay. There's a strike by employees, okay, by other employees that disrupt this employee from working. So the company sometimes may have got a guaranteed minimum. Okay, so they say that every week you're getting paid you $0.2 per hour per output that you complete. Okay, however, if you're not able to achieve at least if the pay is lower than $750, then as a company we pay you $750. Okay. So there's a guaranteed minimum. Okay, this is just an example. Okay, where there's a company is giving the employee a guaranteed minimum. Okay, just in case the employee is not able to work, is not able to earn more than $750 based on the output or the units they're able to produce. Okay, maybe it's based on the company failures. Okay, so if, for example, okay, in week 1, this employee produced 5,000 units. The pay to the employee therefore be equal to the units completed. Okay. In this case, therefore, is 5,000 times the pay per unit. In this case, is 0.2. Therefore, $1,000. So for this employee, since they have exceeded, okay, the 750, the company pays them $1,000. Maybe if, for example, the employee was only able to produce 1,000 units, okay, that week, times 0.2, the pay would be equal to $200. but the company is giving an employee a guarantee of 750. Therefore, this employee, okay, since the pay based on the output is lower than the minimum, the employee takes home the minimum, which in this case is $750, the guaranteed minimum of $750. Okay, that is pay based on, okay, pay that is based on the number of units. Okay, where this company, for example, has a guaranteed minimum. If there's no guaranteed minimum, if there was no guaranteed minimum, the pay to the employee in this case is therefore equal to $200. Okay, clear? Okay, and that's the case in this example here, week 2. In week 2, the employee only produced 3,000 units. Therefore, the pay based on the units would be equal to 3,000 units. Okay, we multiply by the amount to be received per unit, $0.2, and the pay therefore based on the units would be equal to 600. However, since there's a guaranteed minimum, the employee will be taking the $750. Okay, in short, that the pay to the employee is the higher of the two. Okay, if you have to use that simple term. Okay, the pay to the employee by the end of the week is the higher of the two pay, the higher of the pay, or the higher of the $750. Whichever is higher is what the employee takes home. Clear? Okay, that's the pay. It's based on the units completed. The pay is based on the output. Okay, the pay is based on the output, not on the number of hours the employee is working. Okay. Then you have the last method is called the use of the bonus or the incentive scheme. As I mentioned, the case of the bonus. Okay, so here the bonus, okay, is not based on the output. It's not based on the hours that you're working. Okay, it's based maybe because the company or the department has done well. Okay. So the department agrees that you're going to pay them, every particular employee of this department, X amount of money. Okay, so the pay is not based on the output. Okay, that's why you can say that for some of you was getting confused. Okay, how is the bonus not based on the output? Okay, so always bonus schemes are not based on the output. Okay, okay. So maybe the bonus can be based on pay based on company profit. Okay, the company made a lot of profit that year, so they in quotes, okay, want to pay the employee a bonus, okay, because the company good performance, not because of your own individual performance, okay. And by the most often than not, okay, the bonuses are going based or call. They can have individual based bonuses, but the most of the time they're going to be group based, okay. So you're told that you as Department A, okay, the bonus will be paid is equal to, let's say, $10,000. Okay, so you share $10,000 among yourself as a group. Okay, but sometimes you have a case where there's going to be individual based. Okay, so if it is possible to evaluate a case where you can assess the performance of the individual employee, okay, then the company can do that. Okay, but if it's not possible, okay, to evaluate the individual performance, okay, let's, for example, okay, you are an accountant, okay. Don't forget, you can't work alone. Okay, you'll be having other people work together with. Okay, if that's the case, therefore, can we say that you as an employee, you as an accountant A, this was your input to preparing the financial statement or get the cost of or preparing the management report? You can't say, because every person is going to be your input is going to be an output of someone else. Okay, so at the end of the day, okay, you're going to have a case where it is not possible to evaluate individual performance. If that's the case, therefore, the employee pay is based on, okay, the employee pay is based on is group based. Okay, the bonus is group based. Okay, but if it is possible, okay, to evaluate the performance of the individual employee, okay, you are a driver, okay, maybe the company, okay, you're a truck driver, okay, the company can tell that how many hours you have been able to input this particular year, okay, you're able to drive, let's say 1,000 hours, okay, on the road, okay, based on those hours you worked, okay, how much revenue, okay, or profit have we been able to make from deliveries you have made, okay, from the number of hours based on you as a driver, okay, every time that you're going to with the truck, okay, because this is the number of units that you have been able to deliver, okay. Now, as a company, what's the profit we made from these particular deliveries, okay? So since now we can go to track, okay, and say this employee, okay, this driver, okay, has been able to, in quote, make for us X profit, then you can say that you're going to give this employee, okay, bonus based on the profit we have made on the deliveries they have made. Okay, if that's the case, you can be able to track individual performance. Okay, then you can pay what we call individual bonuses. Okay, but if it's not possible to be able to tell that this was the input of the individual employee, then the best is to do a group bonus. Okay, clear? Okay. So go through this example we discussed together. Vanessa, what do you have for direct labor? Ian.
Is there another question right beneath that one?
No, this is the only question here in this page. Okay, Vanessa. Vanessa.
Still doing.
Okay. Jenga. Jenga.
Not yet.
Okay, let's do it together. You guys, you take keys here.
Can I try?
Yeah, sure.
Indirect labor 248 and direct labor.
Sorry, for direct you get?
Direct 956.
Sorry, 9?
956.
956. Okay, for indirect?
248.
248. Okay, that's from Alexander. Okay, let's confirm that. Yes. Yes, who is this? This Ian.
Yeah, that was from Ian.
Okay.
Yeah, now mine I've gotten direct.
Sorry, I lost you, Alexander, a bit.
Yeah, direct labor.
Yes.
930.
930.
Indirect labor 268, 269.
269.
Yes.
Okay, that's from Ian and Alexander. Okay, let's attempt to do it together. Okay, let's do it together. So first we begin with the first one. The direct production workers, okay, 120 hours at 6.4 per hour. There was overtime hours, okay, and these overtime hours were being paid at 9.4. So there's a premium there. I hope you can see there's a premium. Then you have indirect workers, 40 hours, okay, indirect workers, overtime hours. Oh, the hours paid for the production workers, 4 of these were idle time, okay. So 4 of the hours that these employees were paid for, they were idle time. So let's work it together, okay. So of the 120 hours, okay, of the 120 hours, 4 were idle time. So give me the form. The total hours the employee were actually being involved in production, okay. We can begin for this, the first case here. Then we call this is direct, indirect. Okay, so this is direct, so just direct costs, and then here you have indirect costs. The direct costs, therefore, these are production workers. Of the 120, okay, 4 are idle. Therefore, the active hours is 116. Okay, and these are 4. Therefore, 116 times the pay, which is 6.4. The 4 is idle time, which we classified as part of the indirect cost. Therefore, it will be 4 times 6.4. Give us how much for the direct cost?
742.
742, exactly. Exactly, without any loud enough.
0.4.
Okay, 7.2.4. Okay. Indirect costs?
25.6.
25.6.
Yeah.
25.6. Okay, that's for the first bullet point here. Then also, into the direct production workers, overtime hours is 20. So here, number 2 is overtime hours. Okay. So first we begin overtime hours are the basic pay, overtime hours, basic pay. Now we say that overtime hours for the basic pay of employee who in production is the part of the direct cost. Therefore, the 20 hours, the basic pay remain at 6.4 times 6.4. Okay. The premium, called overtime premium is part of the indirect cost. There were 20 hours times the premium, which in this case the time the premium is equal to $3. Why? Because the pay was 9.4, the basic pay is 6.4. The difference is equal to 3. Okay, 9.4 minus 6.4 to us 3. Therefore, what's the basic pay for the overtime hours? 128.
Yeah.
128. The overtime premium 60. Give us 60. Okay, I should have done here so that we avoid confusion. With 20 times 3 give us 60. Okay, so the premium we said is part of the indirect cost. That's for the second bullet point here. Number 3, these are indirect workers. Okay, as we mentioned, they pay to all indirect workers is part of the indirect cost. Okay, so this is 3. Okay, this is pay to the indirect workers, pay to indirect workers. Is equal to 40 hours times 5.6, therefore 40 hours times 5.2 to give us how much?
To 8.
2008, 208. And then number 4, okay, this is for the bullet point, overtime hours for indirect workers. Okay, there's overtime. These are also indirect workers. It's still classified as indirect costs, okay, which is equal to 5, okay, times 8. In this case, this is 40. 5 times 8, which gives therefore 40. So for the case of indirect workers, you don't need to make a distinction. All the cost is indirect, okay, and that is it. Yeah, that is it. Okay, total and total here. You get how much for the case of direct cost? So it was 2.18 plus 128.
$308.
Okay, for 308 here. 308.6.
Yeah.
Okay, for direct cost, it's 70.4.
So,
First confirm confirm the total direct.
I made a mistake. It is 333.6, not 308.6.
Oh, 33.6.
Yeah, 333.6.
Okay, the direct cost. So for 2 plus 128. Is it 70.4?
Yes.
Okay, great. That's why you meant to have done it. Alexander, where did you make the mistake? Where was the mistake?
The mistake was I did what? I did what? The mistake was actually there was no mistake because I was figuring it out as I go on. I've learned a few things. Yeah.
Okay.
I've learned new things.
Okay. Ian, where did you mess up?
Yes.
Where did you mess up?
I think it's because I didn't do any of that.
Oh, okay. Maybe where the confusion could have been, I think maybe most of you, the phase of last bullet point, okay, you maybe forgotten that we have idle time there, because in case you make that confusion, you don't recognize that we have 4 hours of idle time, then you're going to end up with the wrong answer, maybe. Okay, but it's clear to all of you.
Yeah, actually, the mistake was I didn't add the I didn't calculate this why it's 128. I didn't minus the for the premium. I didn't minus the overtime of 9.4 minus 6.4.
Okay, don't forget. Yeah, you have to be quite careful there. Yeah, true. You have to be quite careful there. And you have to minus that premium, because premium, if you remember the one we've just done right now, okay, the premium was we classified it as part of the indirect cost, the premium, not only the premium, don't forget, only the premium. The basic pay is part of the direct cost. Okay, any other question? Okay, no question. Then we take a break and we meet at 2:15 for our second class. Okay, see you then at 2:15. And if you don't have, if you don't have the code, there's a code I was giving out